Namaskaram students. Today let us move on to the new chapter, that is bank reconciliation statement. Before that, I will ask you some questions. You can think of the answers. See, you can imagine you are a owner of a small shop, isn't it? So you are going to maintain, already in the previous chapter what we have seen, 3-column cash book, 3-column cash book, isn't it? So in that triple column cash book, what are all the columns we have maintained? That is discount. In the debit side, we have maintained discount column, cash column, and also bank column. Like the same way, in the credit side also, we have maintained discount received, cash column, and also bank column. Isn't it? Both the side we have maintained the same account, cash book and passbook. So, why we have maintained this triple column cash book? Why the customer is maintaining the triple column cash book? So, from this bank reconciliation statement, we are going to know the importance of maintaining the triple column cash book. Are you clear? You can imagine you are a small shop owner. You are going to maintain a triple column cash book for your business. So now you can think, I will tell you the following points. How often do you check your cash balance? Cash in hand, how often you will check, isn't it? Day to day, what are all the balance, cash in hand? What is when we can see, if you can see the cash book, immediately you know that what is the available balance in your cash in hand. Where the balance will represent the cash book balance. Which balance is a favorable balance? Cash book debit balance is a favorable balance. You can understand the concept. Why the favorable balance? Why we are telling it as a debit balance? Because debit side denotes receipt side. So already I have told you, whatever we receive, we are not going to spend more than we receive. So always there will be a debit balance is a cash book debit balance is favorable balance. Cash book debit balance is favorable balance. So often you will check how much amount I am having in my hand. For example, 20,000. Today my cash balance as on 31/3. My cash book balance is where it will represent that. See, for example, we can take cash book to balance. We can take, for example, this is a cash book. In a triple column cash book also, this side, debit side, you can write closing balance. To balance, brought down. How many rupees? 20,000. So on March 31st March, you are going to get the balance. So often you are going to check the day-to-day cash balance. What are you going to check? Day-to-day cash balance. You are going to check in the cash book. So how often you will check? Then every day or every day you will check, once in a week you will check. So why we are checking the cash balance? To meet out the day-to-day expenses. Why we are checking the cash balance? So depending upon the available cash balance only, we have to meet out the establishment expenses. For that reason, we are checking the cash balance, isn't it? Am I clear? Yes. Then how will you make sure? See, cash balance you are checking in your cash book. How can you check the bank balance? See, bank column, in triple column cash book, bank column you are checking the bank balance also. Still, if you have a more clarity among the bank column means, you have to check your passbook. Everybody, all the business concerned must have the bank account. All the business concerned, what they have? They must have the bank account. So, they must check the bank balance in which bank? Where? In the passbook they will check the bank balance. So, and also bank passbook, another name we call it as a bank statement. What is the other name of passbook? We call it as bank statement. Because bank is having the passbook is maintained by the bank, so that it is a bank statement. Cash book is maintained by the cashier, so we can refer the cash book. So from this lesson, what you are going to learn, we are going to reconcile. Reconcile means the trial balance. You have learned that tally, it must agree with the debit balance, must agree with the credit balance. Debit side must tally with the credit side. This is a debit side. So many items you are writing here. So whatever the debit balance must be tally with the credit balance. Like that, in the bank reconciliation statement, what is the meaning of reconciliation? Reconcile means we are going to tally the cash book and the passbook, isn't it? So passbook balance, passbook maintained by cash bank. See, in the triple column cash book, we have a bank account, isn't it? So that bank account and the passbook account are same. That we are going to learn from this lesson bank reconciliation statement. For that, we will get the bank statement from the bank and then we will reconcile with our triple column cash book where we have entered all the bank transactions. That is called, this is how the introduction of this topic, that is called bank reconciliation statement. That is passbook, we are going to tally the passbook with cash book, bank column of the cash book. Bank column of the cash book. Are you clear? Now let us get into the lesson. Now let us know about the bank statement. Already I have told you now. So you know about to preparing the triple column cash book. You know what are all the bank transactions. So that now only you get to know the advantages of writing the contra entry, isn't it? So importance of writing the contra entry. After learning this chapter, you will be knowing very clear idea. Now let us know about bank statement. Bank statement, other name we call it as passbook. What is the other name of a bank statement? We call it as passbook. So what is mean by reconciliation statement? We are reconciling the cash book which is available with us. That should be tallying with the bank statement. Bank statement is prepared by the, see, cash book is preparing by the accountant and then passbook is preparing by the bank employee, isn't it? Passbook is maintained by the bank employee. Here cash book is maintained by the cashier. So both the cash book available, cash book bank balance and passbook bank balance must be tally. So that is called bank reconciliation statement. Now let us know in deep with about bank statement or passbook. Other may call it as a passbook. So what are all the things they are doing in the bank? Let us see. So nowadays all the business transaction, what they are doing, all are giving check, isn't it? So depositing check. These days they are depositing to deposit check receipt. Whatever we are dealing, all the transaction in check. Why we are dealing all the transaction in check? Without, see, after that is the evidence for us, because they will put the check in the bank. So bank there will be an entry. So that is the evidence for those who are debtor and creditor are giving the check. We are issuing the check to the while we are purchasing. For example, you can take, see, while we are purchasing, we are a creditor for the other person. So while we are purchasing, we will give the check. For that, why we are giving the check? That is called check issued. Check issued means what? We are giving the check to other person, creditor, isn't it? Check received means we are receiving the check from the debtor. Are you clear? So, for the business transaction, nowadays people are dealing with check because that is the evidence for giving the money, isn't it? So, and nowadays we are giving the bank account. We are giving all the payment through check. Or whatever check received and cash received with the bank payments can also made through bank. See, cash, suppose some creditor in the journal entry we have seen creditor. See, for example, you can take that Ram deposited amount directly to the bank. Deposit amount directly to the bank, isn't it? So, direct transaction also happening. So, directly they have credited means our bank balance will be more, our cash book balance will be less, isn't it? So, and then these cash payments can also made through bank. They will pay the check. Directly they will pay the amount in our account. They will pay the amount so that our bank balance will be more. Then, because dealing cash to the bank is always what? Safe. Already I have told you, dealing cash through bank is safer side because that is the evidence for us. So, and also it is a legally necessary to operate the transaction through the bank beyond a certain limit. So that is a legal evidence for us. Suppose anybody you did not pay the payment means we can show our check. That is a legal document. Already I have told you, check is a negotiable instrument, isn't it? So that is a legal evidence for us. Wherever if you show the check to the court, that will be valid. So, nobody will take any action against us. That is a check is a evidence for us. Issuing a check is a evidence. Evidence for making the payment. When any bank transaction is undertaken, 2 records are kept for the transaction, isn't it? So, one is to be kept by, already I have told you, one is to be kept by the customer who is keeping the bank cash book, triple column cash book we will enter, isn't it? Then which is that will be reflected. See, triple column cash book we are going to maintain the cash book. So in that also we are going to enter. Immediately anybody give check means where we will enter triple column cash book. Triple column cash book in the bank column we will enter. Isn't it? Triple column cash book in the bank column. Then next one. That is the other one is kept by the bank. That is recorded as a bank statement. So the same bank, whatever we are receiving, the same will be received through bank also. So bank also maintain the bank statement. Who will maintain the bank statement? The other one is kept by the bank, which is called bank record. So bank also having the record, that is called bank statement. Bank statement also maintained by the bank. Then see, it can be used that the cash book maintained by the business and the ledger account maintained by the bank, it record the same transaction. Then bank statement or passbook is simply a copy of the customer's account in the book of bank. A bank may send a statement at a regular interval to its customer. Bank, we can get the statement at a regular interval. Regular interval means once in a month or once in a month we will get the statement from the bank. Then only we can reconcile with the cash book. cash book bank column. So bank may send a statement at regular interval. It shows what are all the things will show in the bank statement. It shows all the deposit, whatever bank statement. So I will give you a clear idea of bank statement. Bank statement, how the passbook will let us know about the bank statement. What is the other name of bank statement? That is, bank statement is a passbook. How the we all seen the passbook at your home. Everybody is having the passbook. Nowadays everybody is having the account holder. Everybody is account holder in various banks, isn't it? Now I will show you the passbook format. Now let us see. See, it is a bank statement, isn't it? So this is a bank statement, or another name we call it as a passbook. It is a copy of the customer's account in the book of bank. So customer, what are all the dealings, what they have credited, what they have debited, withdrawals will be the debited. So that we will know about later. Now I will explain you about this format alone. So a bank may send a statement at a regular interval to the customers. It shows what it shows, all the deposits and all the withdrawals. Credits and debits represents withdrawals and also all the deposit. What are all the deposit? Deposit will come under the credit column and withdrawals will come under debit. Why does it change? Why there is a variation in the passbook? I will explain you later. Now I will explain the format alone. So at regular interval, what the customer will do? The customer will get a statement, or else the customer, one of the accountant can go and get the bank statement from the bank, or else the bank will send the bank statement to the business premises itself. It contains what? It shows all the deposit, what are all the deposit the customer made, and what are all the withdrawals the customer has taken, and all the balances, and what is the available balances in the customer's account on a particular date. So in recent time, what we are doing? In recent time, the copy of the records can be obtained by the customer, which statement they are getting. So particular date, if you type the date means we can get the electronic statement. So that electronic statement we call it as a e-statement. We don't want to enter all the transaction in the passbook because we are doing lengthy transactions. Lot more business means they will give a statement. They won't give all the entries we can't enter all the entries in the passbook because passbook page was over. So that they will give a e-statement to the accountant. That e-statement will be considered as a passbook. So what are all the accounts we are maintaining? You know very well about savings account, isn't it? So what we are doing, bank. What are all the accounts we are maintaining? Savings bank account. In commerce, we have studied about the savings bank account. We are going to save the money for a rainy day, isn't it? Then recurring deposit account. We are saving for further improvement, further studies, or any meet out any heavy expenses. For that we are depositing the money for recurring deposit. See, for after 12 months we are depositing per month 1,000 rupees means after 12 months we can get 12,000 rupees. We can learn any other course. For any other reason we will utilize the recurring deposit. Then fixed deposit, if we have lot of money, what we will do? 2 lakhs, 3 lakhs, lakhs and lakhs of money we have. We have disposed the house. We are getting 10 lakhs money. What we will do? We will deposit all the fixed money in the fixed deposit so that we can get the interest. So these are all the accounts we are maintaining with the bank. It can be opened with the bank by different types of customers. The same customer can have a savings banks, recurring deposit, fixed account, everything they have. Whereas a business person, they can open current account. Business person, those who are doing business alone, can open current account. For what reason they are opening the current account? To avoid the overdraft balance. Let me tell you about overdraft. What is overdraft? To avoid the overdraft facility, the current account is opened by the who? Business people. Business people alone eligible to open the current account. So the remaining people, they will open the savings bank account or recurring deposit. The same customer, I can open in my name savings bank and recurring deposit in my name. I can have a fixed deposit. Everything I am eligible as a individual person, isn't it? Then whereas a business concern, in the name of concern name, they are opening the current account so that they can avail the overdraft facility. They are doing business, they want to do lot of lakhs and lakhs of transaction in a day. They can't get lakhs of money, so they are going to borrow the money to meet out the business expenses. For that, they are going to borrow the money from the bank, that is called overdraft. Let me tell you clearly still more further detail about the overdraft. Listen, why there is a difference? Whereas in the cash books, we are maintaining the cash balance in the debit side, isn't it? Cash book, how we will do? You can imagine cash book, debit balance, isn't it? So debit side, we are using all the cash. See, as far as cash book is concerned, favorable balance is a debit balance, isn't it? As far as passbook is concerned, favorable balance is a credit balance. Why it's so? Why there is a changes? Why we are doing like this? That is, see, when the entries in the bank statement are compared with the cash book, what we are doing? We are comparing the cash book with the passbook. At that time, it will be found that the accounting treatment is reversed in the cash book. So, we are doing the accounting treatment reverse in the cash book. See, in the passbook, we are maintaining the passbook balance. Credit balance is a favorable balance. Whatever deposit we are depositing, that is considered as a credit balance. Whatever the withdrawals, it is considered as a debit balance. Here, whatever we are, as soon as we are receiving the cash, debit the receiver. So, why there is a variation? What is the meaning? See, this is because the cash book is prepared from the business point of view. From the which point of view? From the business point of view. Cash book is prepared from the business point of view. Business point of view. Whereas the passbook is prepared from the bank point of view. Why there is a difference? This is because bank is a debtor for the business. See, bank is a debtor for the business. Bank want to repay the money from them, isn't it? They have to whatever money we are depositing, that should be repaid by the bank. So that bank is a debtor. As far as bank is concerned, bank is a debtor. Debtor for the business, and business unit is a creditor for the bank. So, bank is a debtor, business unit is a creditor for the bank. Bank is a debtor for the business unit. So, business unit is a creditor for the bank. So that this variation. Then when money is deposited by the bank, whenever we are depositing the money by the business into bank, the customer account is credited in the bank book. what we are doing? When we are depositing money to the bank, the customer account is credited. Isn't it? So bank account data to Mohan, credit the giver, like that we are depositing we are writing the entry. Then like that, amount owed by the bank, that is to the customer. Amount we are withdrawing the amount from the bank. That also how we are maintaining the account. Similarly, when the money is withdrawn or taken out of the bank by the business, the customer's account is debited. Customer account is debited. Withdrawing the bank, we are withdrawing the money from the bank means which account is debited? Customer's account is debited. I will tell you an example. Now let us know about when the cash deposited into bank by the customer, in the customer's bank book, what is the entry? Bank account data to Ram's account. Bank balance will be increasing. Bank is receiving the money. So that what will be the amount? Why there is a variation? When the money is deposited by the business into the bank, the customer account is credited in the bank's book. Customer account is credited in the bank book. So that as the same thing is the amount owed by the bank to the customer. The amount owed by the bank to the customer, the same thing we are going to follow. Similarly, when the money is withdrawn or taken out of the bank by the business, the customer's account is debited. So, the customer account, as far as bank is concerned, bank is receiving the money. So that the bank balance will be, what they will do? If they are going to receive means, they will debit the balances. If they are going to give the balance means, in our account there is a credit. Are you clear? So cash withdrawn by the customer, any customer should be debited and bank should be credited. Are you clear that the customer account is debited as this decrease the amount owed by the bank to the customer, because bank balance will be decreasing, so that we are crediting. Bank balance will be increasing, so that we are debiting the bank account. While depositing, we are debiting the bank account because the bank balance is going to be increased, so that they are maintaining their favorable balance will be the credit balance, isn't it? As per the bank point of view. So credit balance is the favorable balance. Debit balance is the credit balance is the favorable balance for bank passbook. Credit balance is the favorable balance for bank passbook. Customers bank passbook. Credit balance is a favorable balance. So here cash withdrawn by the bank means the customer's point of view, customer account is debited as this decrease the amount owed by the bank to the customer. So as a result, what is this? As a result of this, the favorable balance as per bank statement will appear as a credit balance and overdrawn balance is a debit balance. Overdrawn balance is called as a debit balance. If we are withdrawing more than the available balance, that is called overdraft. Overdrawn. Are you clear now? Now let us move on to the bank overdraft. What is meant by overdraft? Now let me explain about the overdraft. What is meant by overdraft? Already I have told you. Overdraft means what? That is, we are withdrawing the money. That is, it is not possible to have an unfavorable balance in the cash balance in the cash book. See, unfavorable balance, it is not possible to have an unfavorable balance in the cash book, isn't it? So that, but it is possible to have unfavorable balance in the bank account. When the business is not having sufficient money in the bank account. See, when the business is not having sufficient money in the bank account, what we will do? Already I have told you, the business person can borrow the money from the bank. So as a result of this, amount is, we are overdrawing money from the bank. That is called overdraft. As far as bank statement, passbook is concerned, that is a debit balance, negative balance, because credit balance is a favorable balance. See here, already I have explained to you, cash book. We are going to maintain the cash book, isn't it? Cash column and also bank column. Like debit side and also credit side we are going to maintain. Debit side, what are all the amount? Cash book alone you can take cash balance. That is in our cash book what we will write, balance carried down. Whatever amount we are having in our hand, we can write, isn't it? So as far as bank passbook, debit column, already debit side, no, debit column, first they will write the credit column and then next debit column. Already I have explained to you, isn't it? So in that credit column, if we have balance, more balance means we will enter the amount in the credit column. Now we are seeing about the overdraft, isn't it? So in our account, for example, we are having only 10,000 rupees. In our account, we are having only 10,000 rupees. We want to give a person, a customer, 50,000 rupees, isn't it? So how much amount we are going to borrow from the bank? 30,000 rupees we are going to borrow from the bank. So bank passbook, unfavorable balance. We are withdrawing more than our balance. Already we have only 10,000 balance. We are going to withdraw money. We are going to hand over money to the customer, 40,000 rupees. For that, how many extra amount is needed? 30,000. That will be given by the bank. So passbook, are you clear? Passbook is, we are withdrawing over the balance, is called overdraft. That is a negative balance. Are you clear? Suppose I am having 60,000 rupees in my account, isn't it? So I want to meet out the customer, I want to give a check to the customer, 40,000 rupees. No botheration, if I have money, I am going to give in a single check 40,000 rupees. So what is the remaining balance? 40,000 rupees they will debit, because as far as bank is concerned, bank is a debtor, so that they are debiting, isn't it? They are giving the money to us, isn't it? So as far as bank is concerned, bank is a debtor for a business concern. We are a creditor for a bank. Are you clear, girls? Are you clear? So bank is a, as far as the bank is concerned, bank is a debtor for the business concern and the customer is a creditor for the bank. Are you clear? So what I will do? Now I am having 60,000 rupees in my account. So I want to give Mr. X, I have to give 40,000 rupees. Immediately I will give 40,000 rupees single check. I don't want to borrow money from the bank. So what will be the remaining amount? 20,000 rupees. I am having that is a favorable balance. I am having favorable balance, more balance in my bank. It is called credit balance. Are you clear, girls? Are you clear? Now come to the cash book. In the cash book, what is the favorable balance? You know already, receipts. Here, you know all the column is receipt. This side is a payment column. So already I have explained to you, we are not going to spend more than the receipt. So always favorable balance is a debit balance. Are you clear? Favorable balance is a debit balance. Suppose in rare case will come favorable balance is a negative balance. Suppose payment is more than the receipt, that is a overdraft. That is a negative balance of cash book for cash book. Favorable balance in the cash book is a debit balance. What balance? Debit balance. Isn't it? In that case, overdraft as per passbook is a debit balance. We are having more, we want to give money to the bank. We have to settle down the money to the bank. Who is having the overdraft facility? Already I have told you, current account holder is having the overdraft facility because a business person alone can withdraw money more than the money because business there may be a risk is involved, so bank is going to give money. For that overdraft, bank will charge interest. That interest also want to given by the customer. Now passbook, bank statement means other name we call it as a passbook. Passbook is favorable balance is a credit balance. Unfavorable balance is already I have told you, explained you. Unfavorable balance is a overdraft, isn't it? So cash book is a credit balance. Cash book credit balance is a overdraft. Now let me explain about the different